Hello there and welcome back to Dukascope TV. I'm Monica Gibson and I'm joined in the studio by Dougal Thomson from The Economist. We're going to be taking a look at some of the major headlines which should be on investors' radar, namely an illegal slush fund in Spain and also political tensions in Portugal which may lead to early elections. Dougal, thank you very much for coming in today.
Thanks for having me.
Not at all. Now, if we look at Spain first and foremost, I mean, the situation there is very, very interesting. Some people are saying that, you know, Rajoy has received these illegal slush fund for quite some time now, but could you just give us a little bit of information about what details we do have on this story at present?
Okay, at present, this week on Monday, a gentleman called Luis Barcenas, who was the former treasurer of the Partido Popular, that's the ruling party that Rajoy heads, he told a court in Madrid that he had given illegal cash payments to Mariano Rajoy over a period of time as part of a giant slush fund that he managed, which took cash from construction companies and then redistributed it to members of the government. He said that this system had continued for 20 years until it was junked 3 years ago, and that Rajoy himself had been taking cash bribes as recently as 3 years ago. Rajoy denies this vehemently and has vowed to not to cede to blackmail, and he is trying to tough it out at the moment.
Now, some of this scandal, you know, whether or not it will bring down the government is a very predominant question here. Whether it does or not, it might, you know, lead to dents in authority and also popularity for Rajoy. But do you think it actually has the strength to bring down the government, to dissolve them?
Well, it's certainly dented his popularity and the popularity of his party. They won the elections with about 45% of the public vote. They're now something down around 24% in the approval ratings. I think, however, that Rajoy will be able to tough this out. There's a number of factors that lead me to think that. The first is that he's got a commanding majority in Parliament. The second is that the socialists themselves are mired in illegal funding scandals of their own. The third is that the judiciary process in Spain is very slow and cumbersome. And the fourth is that the Spanish themselves seem to be, as a people, a bit more tolerant or less intolerant of corruption in public life than some of the rest of us might be. So I think those factors combine to give Rajoy a good chance of staying in power until the end of this parliamentary term in 2015.
It certainly is interesting that they won't be put out of favour because the other party is so unpopular as well. But in terms of the economic future, obviously these political strains have got a huge impact. But how would you say the Spanish economy in general is looking for the mid and longer term?
Well, if we look at Spain right now, it's in a better position than it was 12 months ago, which isn't saying very much. I mean, Spain is still in a double-dip recession, which it should come out of sometime soon. Unemployment is at record levels, 28%, and some really horrific figures among youth unemployment, over 50%. But I mean, the government has implemented a number of reforms to try and make the country more competitive. They've gone some way to sorting out the banking sector. The country's returned to capital debt markets, sovereign debt markets. Spanish bond yields for 10-year bonds are trading around 4.7%. So that looks okay. In the sort of immediate short term, the country should come out of its recession. But there are some fundamental issues, some structural issues with Spain's economy in the long term that do need to be sorted out. It's a very bureaucratic country. Red tape is an issue. It's difficult to start a company, for instance. The economy has a preponderance of small and medium-sized enterprises where productivity is low and where they find it really difficult to get capital. There's a credit crunch in Spain that is really choking growth. If the government can move on alleviating some of these issues, then the country has got a reasonable chance. And some experts think that Spain's best option in the 21st century will be to develop the sort of value-added services sector. It's a country that people like to visit. And if they could tap into the fact that millions of tourists are visiting Spain every year and learn how to not just sell them a coffee but replace their hip, then that could be a really interesting opportunity for Spain.
Certainly. I mean, as you mentioned that people in Spain are quite content, but they're not too, going to raise turmoil. as other societies might do. But in terms of, it does seem as though they're kind of getting towards the end of the tether. So, you know, hopefully these things can be ironed out and they can come up with something. But if we talk about Portugal, similar, not too disparaging situation over there, the Portuguese government began to unravel just a few weeks ago. But what are the details and what is the nitty-gritty problems which are at the forefront here, would you say?
Yeah, well, you're right to say the government is unravelling. That's exactly what's happening. I mean, unlike Spain, it's a coalition in Portugal that is in power. And 2 weeks ago, on the 1st of July, the finance minister resigned, Vítor Gaspar. He said that there was no public confidence in his austerity programme and that also there was no support within cabinet for what he was trying to do. The Prime Minister, Passos Coelho, moved quite quickly to replace him. He promoted the Treasury Secretary to replace him, but not everybody was happy with that, and the Foreign Minister resigned because he didn't like that replacement. So the whole governing coalition is unravelling. The President is sort of the figurehead above this and is trying to look for the least damaging way out of this crisis. And realistically, that looks like it will have to be calling early elections 2 years ahead of schedule, perhaps in September or October.
Now, in terms of investment point of view, how damaging could this be for Portugal, and how therefore worried should investors be about this situation?
Very damaging and very worried, I would say. If we just step back a couple of years and remind ourselves of the context, in May 2011, the Troika, the EU, the IMF and the ECB stepped in with a €78 billion bailout package. Portugal has done pretty well in respecting the terms of that bailout package. They have been a sort of poster child for austerity in the bailed out countries, but it's come at a huge cost. And now, you know, the political and social costs of austerity are tearing that governing coalition apart. And what that means is that a full return to capital markets for Portugal is becoming less likely. And then what that means is that there's the prospect of a second bailout on the horizon, which could involve a debt restructuring of the first bailout and private sector haircuts. So investors would be right to be concerned of what's going on and worried about the future.
You know, obviously the thing which is driving them out of recession is the thing which could therefore, you know, split them apart, which is very interesting. But how therefore does that affect the government's reform drive towards austerity and towards getting them back into the capital markets?
Well, there's very little political or social support for the government reform programme. They did a very good job of keeping that austerity programme on track, but it just seems now to have completely run out of steam in terms of having the political support to drive this through in the face of mass public opposition. And you've got the socialist leader, the leader of the opposition, saying we must have an end to austerity politics, we must renegotiate the terms of our bailout, and he's saying what the vast majority of the Portuguese public probably want. So that's the context, unfortunately. The problem is that you can't just decide that you're going to focus policy on growth rather than austerity. Really, the only choice that Portugal has now is to live with the terms of its creditors or to default.
And in terms of just, you know, try and get through the worst before it gets better again a little bit. But in terms of, you know, Portugal moving forward, you said that there were some opportunities for Spain if they kind of get their books in order, but are you as confident with Portugal, or is there more underlying problems there, would you say?
No, I mean they're not dissimilar countries and people, but and a lot of the same structural issues and competitiveness issues remain in Portugal that Spain is confronted with as well. The Portuguese are innovative people. I think there is an opportunity there for them to promote innovation and entrepreneurship and to drive that sector of their economy. I mean, they will not have necessarily massive industrial giants driving growth, but they can trade on the fact that they are sort of naturally innovative, and they've also got good connections to high growth markets, places like Brazil and Angola, for example.
Well, Dougal, thank you very much for your insight. A lot of interesting points you've made and a lot of great advice, I think, for our watchers. So it's been great having you in the studio. Thank you.
Thanks for having me.
Thanks. Well, that's all from Dougal and myself for the moment. Click back to Dukascope TV for the hourly updates and, of course, more exclusive interviews. Goodbye for now.